Let's get a quick perspective. Jigar Mistry, co-founder of Buoyant Capital, is joining in for quick comments. He tracks the insurance space closely. I think he's owned Max Financial and other insurance companies in his portfolio over the past couple of years. Jigar, you heard Yash. Your first thoughts?
Yes, good morning, Prashant. Happy Diwali to you. I think this is in the right space, the positive space. I think Axis Bank had filed the revised deals under the Para 5, which is the automatic route. So RBI essentially should not, I don't think Axis Bank will be seeking a formal approval from the RBI. So as long as IRDAI then goes ahead and approves this deal, I think that would be the end of it as far as the transaction is concerned. So I think it is the action is in the right space. It is long overdue, and I think if this gets done, then there is a huge upside that we see in Max Financial.
In fact, the stock is very close to its 52-week highs. I think 645 was the 52-week high that it hit just about a month ago or so. So you're talking about a huge upside in Max Financial. What would be the target price that you would set now that the deal appears to be consummated?
Hello, Reema. So I think the way to look at this is that, you compare to like players, say the likes of HDFC Life, and when you track all the parameters of Max Financial, it most closely resembles. In fact, on most parameters, it is doing much better than HDFC Life. So if you look at core ROEV, which is 18 versus 16, you look at VNB growth that is expected by analysts over the next 2 to 3 years, that is also a good 300 basis points higher. And also when you compare the 2Q results, right, the overall industry had a negative growth of 11%, whereas the PE for Max Financial were up 4. So they're gaining market share by as much as, I think, 160 basis points if memory serves. And therefore, when you compare the HDFC Life valuation of close to 4.5 times EV versus Max Financial, say a little over 2 times, then there is one catch-up that needs to happen on the overall valuations framework. The other part is that even on recent performance, right, like last month, you've seen HDFC Life return, 19-20%, whereas Max Financial is up only about 9 or 10%. So not only does it have to catch up on the recent performance, there is a historical backlog of the valuation mismatch, which we believe is predominantly on account of the banker deal not getting through, and therefore the overhang of the promoter stake sale. And once the IRDAI gives the approval, and assuming we are right that RBI doesn't need to approve this formally, then you would see both those overhangs taken away, and therefore the valuations of the two players will match out. I don't think it will go to as high as HDFC Life, but there certainly are tracking that needs to happen from Max's end, and therefore you might see new highs for Max Financial, whereas the overall industry can be fairly stable.
All right, Jigar. Thanks very much. Great speaking with you, and thanks for those quick perspective. Yash, thank you for bringing us that story as well. So that's Max and